Hi, it's Grant Bailey from Enable Deposit Solutions, and today I'm with Dominic Cavagnino from Binari Property, Head of Research at Binari Property, and we're just going to have a chat about the Brisbane property market, what the predictions are for 2025 and how that looks for investors beyond that, sort of with a 5-year plan. Keep in mind, investors are always looking to have two things, I suppose, capital growth and return via rentals. But I suppose to start with, if we can just get a bit of an update on the market, how it's been. There's certainly a lot of infrastructure work going on in Brisbane with whether it's transport and various things that are going on. So there's a lot of infrastructure work that's creating a lot of opportunities there versus some of the other cities around the country. Yeah. So can you just give a bit of a recap on what's gone on the last sort of 5 years or so, particularly through COVID, et cetera?
Yeah, I think Brisbane's been one of the strongest markets around the country. I believe since March 2020 through to sort of March this year, the growth achieved in Brisbane's been up around 65%, just on sort of average dwelling price or average house prices, I believe that is. So Brisbane's been really strong. As you say, the infrastructure pipeline is really strong in comparison to other cities. That's drawn a lot of interstate migration. I think it's been a few things that have driven it. It's affordability relative to places like Sydney, the job opportunity, and the fact that there's a pretty minimal gap in incomes. People in Sydney only earn maybe 8 or 9% more than someone in Brisbane, but they had the opportunity to pay half the price for a property. So that has really drawn a lot of people out there. And on the back of that strong infrastructure pipeline in that sort of construction space, engineers, project managers, all that sort of thing, the actual incomes available to them are higher than what they are in sort of Sydney. So
you've always got that interstate migration versus overseas migration, but you've always got that interstate migration that's always going to be positive versus the interstate migration from, say, in Victoria's. I don't know, but I'm guessing it's going to be negative.
Yeah.
If you compare Queenslanders to Victorians, for example, it's going to be
well, New South Wales is always negative.
Because those lifestyle factors. Right?
Yeah. So New South Wales is always negative in terms of interstate migration. The number of people we lose generally correlates with what our property market's doing. So when property prices are rising and through those 3, 4, 5, 6 year periods where price growth is really strong, we tend to lose more people than we do when prices are a bit more stagnant. Right. So as an example, 2000 to 2004, we had the Olympics, property prices went through the roof for a couple of years. The number of people we were losing year on year was increasing. Right. If you map that out, it actually generally shows that people that leave New South Wales are kind of going to Queensland. That's the place they go. So when we lose a lot of people, they tend to gain a lot of people. Through periods where our markets, where Sydney's a bit more stagnant, you don't see as much movement between the two. But right now, in the years leading up to 2020, 2021, 2022, through 2015 through to 2020, the Sydney market was quite strong. And therefore, the number of people we were losing year on year was increasing. So that has now had that flow-on effect into Brisbane. Right. And they've had, a consecutive 4 or 5 years of really, really strong levels of migration or coming in from interstate, as well as the massive increase in overseas migration we've seen, putting a lot of pressure on their property market. Okay.
So how do you see it playing out for 2025 if you're looking at the market?
Yeah, I think,
because as you said, there's some markets that are going to be cooling off. So what do you think? Given a strong growth over the last 4
years. I think that, like you say, there's been Adelaide, Perth, Brisbane, all kind of hand in hand in having really strong performance in the last 3 or 4 years. The one thing that I think Brisbane has the upper hand over those two cities is it's far more diverse in terms of its employment opportunities and what actually drives that market. One of the things that Brisbane has that is quite similar to Sydney is it's quite limited in its ability to expand out. You've got the ocean on one side, you've got mountains, national parks and things like that on the other. You've kind of got more or less or narrower corridors for expansion. So when demand builds up, pressure on property prices kind of builds similar to what it does in Sydney. The fact that Brisbane is still getting, even though they've seen some strong price growth, still getting a consistent 30-odd thousand people coming out of New South Wales, moving to that market each year, will continue to put pressure on that market. And the infrastructure pipeline is not going anywhere. They've got the Olympic Games in 8 years, so that will continue to sort of feed into that. Sure. So I think the outlook for Brisbane, despite seeing some really strong growth, it still looks pretty positive. Now, when you think about it, Sydney did a sort of 10-year run of really strong price growth. Brisbane's 3 or 4 years into theirs. So
Brisbane sort of missed that post-GFC growth, didn't it? After
from 2012 to 2020, it kind of did nothing. So
it's playing catch up in some respects.
And I think what we've generally seen is when you compare the two cities and I guess the the gap between Sydney and Brisbane, it's always, for the last 50 years, it's fluctuated between Brisbane getting to 70 or 80% of Sydney, and then that gap widening to a point where Brisbane's half the price. Brisbane at the moment is 65 odd % of Sydney's median house price. So if you go off the last cycle, it got to 80%. So there's still probably a fair bit of room there, because whilst Brisbane's been growing, Sydney's also been growing. So it kind of hasn't done what it usually does in its previous cycles, where they grow one at a time. They've kind of both been growing at the same time, and Brisbane at a faster rate starting to close that gap, but still probably a fair bit of room for it to continue on that same trajectory.
Right, okay. And is there any particular property type that's sort of suited to the Brisbane market?
Yeah, I think like anything, you want to find something where there's an element of scarcity. You know, you look at the coastal markets, apartments on those coastal markets have done quite well, being the sunny coast, the Gold Coast, with those sort of, you know, accessibility to beaches and water and so forth. Brisbane, you don't necessarily have that. So the apartment market in Brisbane, it's a bit harder to differentiate yourself when you're buying an apartment, unless you're buying a, you know, super luxurious kind of penthouse type property. So we've always been a little bit cautious around the apartments that get brought on in that inner ring. They have started to perform relatively well in recent times, and that's just because of real lack of supply. My preference is probably the middle ring houses and townhouses. Again,
so when you say middle ring, what's that, 5 to 10K?
5 to 20K, I would say.
10K, yeah.
You know, in that sort of inner middle ring where you're buying into an established suburb, your median house price is around $1 million. You're either getting a new house in one of those sort of small subdivisions that takes place in those areas, or, you know, a townhouse in those areas, I think can be quite strong. On the back of that limited supply, I think you're never going to go wrong there, accessing good schools, good transport, all that sort of thing. I'd be cautious of your outer suburbs where there's a lot of land available.
Regardless of what you're buying.
Yeah, your Logans, your Ipswiches, your Cabooltures and beyond. There's a lot of land in those kind of regions. And although right now they're performing quite well, there is potential for supply to be brought on when the market goes through its sort of slower periods of its cycle. So yeah, there's definitely pockets of opportunity, I think, and then pockets to be a bit more cautious when you're buying into.
Okay.
Yeah.
So for if you're going to put your money into the Brisbane market, is that something taking a 5-year view? By the sounds of it, you think the market's going to remain strong because those fundamentals of the infrastructure, the work opportunities, the diversity that's on offer there, and also that sort of the corridor, the nature of the geographics of that area. So is Brisbane a market that you put your money into if you invest?
It's a market I've put my money into. So,
right, okay.
I think the last few years have been strong, but, you know, talk to clients all the time about it continuing to probably be really strong. I think the fact of it is, you know, you can still buy in Brisbane 15Ks from the city for under $1 million to buy a brand new home, or an existing home for that matter.
Right.
You don't have that ability to do that in Sydney. So despite the fact that it's still done well, I think it's not hard to see those properties kind of being worth 1.5 to 2 million in the next 5 to 7 years kind of thing. So I'm pretty confident in that market. And to go back to your first point around rental returns, you know, even those are still quite strong in Brisbane. And that's what's important to enable an investor to hold on to the properties. So I'll be really confident in Brisbane over the next 5 years, I'd say.
Right.
Yeah.
Okay, Dominic, well, I appreciate your insights today, and thanks for your time.
No, thank you.